All right, DIY community members, I'm excited to share this brand new SOP that I've created in efforts to help not just brand new wholesalers and investors pinpoint their target markets, but also for those that are looking to branch off into a new market or maybe take their business virtually. I hope that this SOP is the only resource that you need, and I truly believe it should be the only resource you need in order to conduct your market research and finalize the best market for your business model. And that's going to give you the best chance to make money in the timeline that you're looking for, but also find the best opportunities for your business based on the data points that we're going to cover and some of the questions that you need to ask yourself on this SOP. So let's jump right in. So first and foremost, the question you need to ask yourself as a real estate wholesaler or as a real estate investor or as a real estate broker, right? All three of those people are real estate professionals, but how they make money and how they dominate their market or capture market share in their market is going to be different. So you have to ask yourself out of the gates, okay, if you're brand new and looking to get started, are you looking to basically choose a market because you want to build a long-term strategy that aligns to more of an investing model? Or do you want to choose a target market because you want to just get fast cash through wholesaling, build that active capital, and then start looking into markets you want to invest in? Because both of those are going to be entirely different on how we go about building a campaign or launching into a market. Because if you're looking to go deep into a market and find the right investment opportunity for your business, we can do that in any market, regardless of saturation, regardless of competition, and we can commit to the process with the understanding that it may take more time to find that opportunity. Whereas if you're looking to go into a market because you want to wholesale and you just want to churn and burn deals and you have no emotional attachment to the property, you have no plans on investing in the deals in that area, and you really don't have a long-term strategy in that market, then I would say we remove the emotions out of it and we go right into markets that are going to get us the quickest cash conversion cycle on our marketing spend and allows us to, again, build active capital so that we can ultimately pick what our investment market's going to be down the road. So there's no right or wrong answer, but you need to ask yourself these two questions because your answers are going to dictate how we go about finding that market that's going to be right for our business model. So let's look at the potential answers that could come from these. And I want you to decide which buckets do you fall into. So potential answers that I've heard from clients are, I'm looking to build marketing and go into a target market so I can build a long-term strategy for investing into this market. I'm not looking to wholesale. I'm an active investor or I'm a new investor looking to get into fix and flip, buy and hold, etc. But your way of making money is a long-term strategy. Whereas in a wholesaler's perspective, what we often ask is, well, I just want to wholesale deals. I don't really care. I'm not really looking to invest right now. I just need fast cash. I want to get into wholesaling because I want to build fast cash and active capital, learn the game of real estate a little bit, build my team, break a bunch of glass being brand new and try to figuring out the real estate space. Wholesaling is a great avenue to go into, but naturally our target market and the way we go campaigning is going to be different. So these four questions are what I've heard, but there's two that align to the investor and two that align to the wholesaler. All is the same thing. You get my point here. We want you to start thinking, what is your strategy for your business now? And what is your strategy down the road? Because we're going to build a plan accordingly, or you should be building a plan accordingly as well. So if you are falling into the following, I only want to wholesale deals, I do not care about investing right now, I just want to build active capital, or I just want to build and scale a wholesaling operation that builds me active capital, great. You're a wholesaler, and here's what we're going to be looking into, and here's what our goal should be for being able to build active capital as fast as possible. So when we think about before we even conducted market research, we want to remove the emotion from the target market. Right? I used to do deals up in the Northeast where I grew up. I grew up in Connecticut, went to school in Boston, lived in Boston for 10 years. I did a lot of my first wholesaling deals in New England, and that was comfortability. And then what I decided to do is get my head on the understanding that let's remove the emotions out of it. Let's just get away from what's comfortable and let's go into a market that's completely different, like Indiana, and see if I can start to churn and burn deals a lot faster. And voila, what did it do? It increased my average deal size. It increased the number of deals I was closing per month. It increased it decreased my sales cycle. So I was getting ROI from my marketing spend a lot faster. And so because of that, I started to realize that, wow, if I'm just looking to wholesale, who cares about the market? I just care about making active capital and what market's going to be the best for me in order to move deals as quickly as possible. And so remove the emotion, really start going into, more importantly, where there's less competition and saturation, because everyone wants to do deals in the Carolinas, Texas, Florida, California, Virginia, Georgia, Atlanta. I mean, everyone, right? I get it. It's an attractive investment market, but do you really want to be there if you're looking to wholesale is the question you have to beg. So go where there's less competition and saturation. And then, of course, this is one that we don't really necessarily have data points on, but I've experienced this myself, and I've had clients who have experienced the same because I've seen how fast they've been able to get the ROI of our service when they're doing deals in markets where the median home price is sub 300K. And so when you go into these markets and you think about these data points, you're going to really start to look at your market differently, and you're starting to start thinking to yourself, okay, now I'm ready to go in with no emotions. I'm ready to go in to a less competitive market, and I'm ready to, build my sales and negotiation skills up with sellers who are going to be less challenging to work with. So that's why I love it as brand new wholesalers and investors, thinking about these first before we get excited at the vanity of going into those states that I mentioned. And so this is where you need to go in, and reminder, we do have a separate video that highlights the market research template. I'm not going to go over that right now, but I recommend you go watch that, because here's the data points that we look into. What we want to figure out is, or the 4 data points that we look into when we're trying to uncover the best market for wholesaling specifically, is we want to find a market that has a population of 500K and above. We want to find a market that has median home prices of 350K and below. I personally stretch to 300, but depends on the investor or wholesaler. And then I want to see the median number of days on market for active listings being less than 50 days. And then lastly, I'll look into number of homes sold last month. If they're greater than 700, that's usually a really good sign. I have these based and ranked on level of importance, population, median home price, because those are the ones where, hey, are we going to have a fighting chance to capture that market share? Great. What types of properties are we going to be dealing with? What types of seller engagements are we going to be dealing with? And how easy is it us going to be able to move these deals, because we're dealing with a lot lower valued homes. And then, of course, seeing how many days are active, or what are the median days for market listings, because you can see the activity of buyers, right? How active are the buyers in the area, and how much demand is there for the inventory. So that is going to be a refresher for those who have already watched the market research video, but this will be new for those that are watching this for the first time, this new SOP. But go get yourself familiar with this. I have a couple of lead examples, or some market research examples, that I did when I found my market of Indiana, and you can go off the same process. Next is a new resource, however. So if you want to avoid the hassle, I've gone ahead and I've created this, and it'll probably be updated every year, because of course this data is changing. But for right now, this has data on 2024 median home prices across all 50 states. I'm actually going to remove this for right now. And then I have the population growth by state. So what I like to do is I focus on the median home prices, and I'm going to immediately just boil down to anything that is less than or equal to 300K. That's what I prefer. Oops. Great. Now I've uncovered 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 states with median home prices valued below 300K. Then from there, what I'm going to start doing is I'm going to start looking into these markets. And so you can make it easy if you just want to simply go by And if you can have two different screens, basically click all 17. I'm just going to go over because of order of operations. So I'll see Alabama was one of them, population growth, 0.6. Okay, that's healthy. If I look at, what's the next one on my list? Arkansas, for example, it's 0.69. I'll do one quick more for sake of example. Let's go into Illinois, minus 26%. Right, so that might just be an indicator of like, it's obviously state-based. You can go in down and look at the county level. I'm going to talk about in just a moment. But this is just some rough data points that I'm looking into. Like if I was brand new and wanted to see, what I would do is I would go down to all of these states that are under 300K and below for the median home price, and I would just align the population growth. And I look at all the population growth for those states. And maybe I'd boil down to like 3 that had the highest population growth. Because what that tells me is that there's people moving into the state. There's people moving into the area. There's demand. There's more growth. It's healthy. It's positive. Of course, again, remind yourself this is state level, but this is a really good starting point. So again, this is exactly what I did. I ended up coming down to Indiana off of other data points, but there's other markets out there, team, that are ripe for the picking. There's opportunity zones out there. And again, it's not to say that you can't go and wholesale in markets that are above 300K. The expectation I'm trying to set with everybody is that if you go outside of these parameters, if you start to go into pushing these parameters, or if you want to ride the ship in these other markets, just know that there's going to be longer sales cycles potentially. They're very much so going to be a higher cost per lead because you have to generate more leads for closed deal. And then you're also going to have to be very keen on the buyers that you have in that area, because naturally the higher the prices homes are, the less of real estate investors and buyers in your target market that can necessarily afford those properties. So there's a lot of cause and effect when we start to go into higher priced markets, and starts to get into the more saturated areas. So what I will tell you is that if you stick to this format, you can expect, if you're going this route, shorter sales cycles. You can expect a lower cost per lead. But what that's going to do for you and your sales team is that's going to increase more leads coming in. And so I like to say with more leads comes more responsibility, which means you need to be on top of lead management. So understand cause and effect, right? There's good and bad with everything. You're going to expect smaller deal sizes. So I've seen that specifically. My average deal size can fluctuate anywhere between 10 to 15K on any given quarter. And what you'll see in pockets of like the Northeast, California, sometimes in Texas, Florida, and certain markets, average deal sizes are closer to 15, north of 15, 20K plus. So yes, you might get smaller deal sizes, but again, you'll get less competition, market saturation. You'll have more churn and burn deals. So these deals will come in waves more so, and that'll be really helpful, especially if you're brand new and trying to get your business off the ground. So from a wholesaler's perspective, before I go on, because investors are going to look at their business entirely differently, do yourself a favor, stick to this process so that you can avoid going into markets that are going to make it harder for you as a new wholesaler to find success early on. That's my major point of this exercise, and more of my consultative approach and how I would approach it and how I do approach it when I'm talking to new clients coming on board. And then, of course, if you're looking at this from, hey, maybe you want to wholesale still, but long-term is the investment route where you're okay going into a market that might be more saturated, a market that might be competitive, or a market that might not meet those data points. I'm talking about markets like the Floridas, the Texas of the world, the Carolinas of the world, the Virginias of the world, the Atlanta, Georgias. There's a bunch of them out there, the Phoenixes of the world, right? These are markets that it's been desirable for a long time. It's only going to continue to be competitive and desirable, and all the big players are in that space. You can still make money there and you can still find success, but the expectation that I want to set with all of you and what you need to be prepared for is longer sales cycles. So it's going to be a slower ROI to get your marketing. Your higher cost per lead, absolutely. So it's just the cost of your marketing is going to be a lot greater to acquire these opportunities. And then you're also going to have, as a positive, larger deal spreads. So that is a bonus, right? Depending on, even if you're investing, of course, it's a different story, but from a wholesaler side, you absolutely will have larger spreads when you're going to be in markets with median home prices north of 300, 350K, and you're going to certainly find buyers that are willing to spend more. So there is good and bad, like I've said, team, and I sound like a broken record, but you really need to think about these things before you come in and launch your marketing. And some last factors that I think are worth considering: these principles apply regardless if you're doing deals virtually or in your backyard. It does not matter, right? You can still do this and still take the same approach and see what you uncover with markets as you're comparing and contrasting. Next, always go where you have established relationships, right? If I'm talking to clients that are thinking about breaking into new markets, I always ask if they have relationships there first. Why? Because it's going to allow you to have people that are going to help you through the deal making process, where it's going to offset the time, it's going to offset the responsibility of what you need to do in the deal making process. And then also it's going to give you someone who's a trusted advisor, maybe local boots on the ground, somebody that can help you learn the market a lot faster and then be a value-added resource to do deals. So always go where you have established relationships and get their take and see if they're bought into helping you. And then if you're struggling to narrow down in any one state, county, or market, always just go down and network with investors who are active. And you can just join public Facebook groups, just ask questions, engage, see what people are saying about that market, and see if you think it's a good fit for your business model. And then lastly, as a bonus tip, you can go look at buyer activity. There's a short video in here that you can watch as a next step, where I go into in depth on how I use PropStream as well as other list building tools to ultimately find where cash buyers are most active, and how I use that as a data point to ultimately determine which markets to market to versus others that might not be ripe for my dispositions effort. So please, team, go through this slowly. There's a lot of information and additional resources on there. I think this tool will not only be helpful for figuring out what markets you want to go into as you're starting, but as I mentioned, it's always going to be a resource that you can leverage whenever you want to expand into adjacent markets or virtual markets. Catch you guys on the next video, and we look forward to seeing you in the community.